Hi, I'm Josh Cadillac, and welcome to my podcast, Know Your Shit. I've been blessed to see great success, as well as seeing the bottom up close and personal in 2008. And if there's one lesson I've learned, is that if you want to have success and differentiate yourself from everyone else out there, you need to know your shit. As a successful real estate and crypto investor and an educator, it drives me insane that people do not immerse themselves in their craft. Everyone is so busy advertising and testing new sales techniques, they forget the most important thing, the product. Here I want to talk to the folks that got this right, the most successful people in the world in every industry. Bring them to you and find out what they learned in their business that made it great. When you listen to my podcast, you will know for sure that the topics and experts we have on have one thing in common. They know their shit. All right. So guys, we're back here again. Hello, everybody, and welcome to the Know Your Shit podcast, where our knowledge and pride in what we do drives us to excellence. My name is Josh Cadillac, and I'll be in the driver's seat for today's show as we strive to learn how to stop doing deals and start closing for life. We have a great show for you today. Without further ado, let's get started. Today, we got a great guest for you. This is Mitch Jaworski. I met him when I was teaching crypto. He came to my class and he's a crypto rock star. And so we wanted to take and talk to this guy a little bit to see what makes him so good at what he does. Mitch, thanks for coming on.
I appreciate it, Josh. Always a pleasure to come chop it up with you.
It's always fun to talk, man. So where did all the success start for you? Where did it begin?
Honestly, it was a long road. I'm not gonna make it sound like it was easy. I had to put in the work.
Not gonna pretty it up for us a little bit. No,
yeah. So
tell us about the messy.
You know, it is, man. You got to try, fail. Like everyone thinks, like, you just knock it out of the park right off the bat. And maybe some people do. I mean, I guess you have, your Zuckerbergs and people like that, but that's the exception to the rule. You know what I mean? Where you kind of hit it on that first try. So, I went after it in my 20s, in the stock market. I fell in love with the stock market when I was about 21. I was like, oh, this is it. I'm gonna make millions trading stocks and, whatever, managing money or whatever I was going to do. And, I worked in corporate finance and in the financial industry for a little while. But while I was doing that, I was actively investing, actively trading. And then in my mid 20s, I'm like, oh, this is it. I'm making the jump. So I started day trading. I was trading equities on a prop desk. And I was like, I'm gonna be a millionaire by next year. Like, it's on. And you all know how it is with day trading for anyone that's day traded. So, had its ups and downs. I had to basically pay, my market tuition, as I call it. And I went broke, not once, but twice trading, until I finally learned how to first not lose money, but then second, how to actually make money. Now, the sad reality kicked in that when it comes to day trading, it's like a lot of other things. Really, it's just 2% of the people making the big money. Then you got everybody else that's like making a living, just getting by. And then you have all the other people that just, are just blowing out, and you're just recycling new people in. Like, I used to see new people coming to the office every month. So, after I learned how to, quote unquote, make money, that was all I was doing though. I was just making a living. I wasn't making, excess money. I wasn't making big time money. And I was like, all right, I'm clearly not going to be more than 2% in day trading. So it might be time to look into something else. So, essentially, I just burned out because, day trading is emotional warfare. It really is. Like I always tell people, I'm like, it's emotional and psychological warfare. That's the hardest part about it. The technicals is the easy stuff to learn. It's the psychological and the emotional ups and downs of being whipped around by the market, every day. So, I did that, and so many lessons and so much knowledge I got from it that I use still every day, that I use in crypto now. I mean, it's helped me so much with my crypto investing, having this knowledge, from the day trading days. But I left that. And then really it was all right, I'm burnt out. How do I create passive income, right? Like, instead of having to grind. And that's when real estate caught my eye. So I was just like, I got to get into this real estate game. So I bought my first property in 2014. I was 35 at the time. So I started late in real estate, at least in my opinion, compared to like a lot of the people I'm helping these days. And at that point, I started building that passive income, kind of building up a rental portfolio slowly but surely. I kind of took it like this very like conservative way. And listen, there's something that everyone should think about when they are building a business or investing. And it's like, what's my personality type and how does that impact my investing and even like how I build a business? And like me, I've always been a risk averse person. I mean, that's why I named my brand ScaredyCat, like ScaredyCatGuide 2, whatever it is. So um, I took my risk averse nature and I tried to use it to my advantage, where I was like, all right, I know I'm good at analyzing things from a conservative perspective, not, essentially losing money, but I also know I got to push myself to be a little more aggressive because I'm good at being conservative. So I recognize that. So that's what I started to do with real estate. And basically, the more I learned with real estate, the more aggressive I started getting. Now, do I wish I would have been more aggressive sooner? Sure, I do. But I didn't know, the things I didn't know. You know what I mean? So it's like,
Sure.
by learning, you get confidence, but then you got to use it. That's the key.
Yep.
Like, there's
It's
no
the
point.
transition from knowledge to actual application. The analysis paralysis is such a well
Oh,
that
so
people,
much.
and so I mean the idea that I think that I love that you said was the recognition of your own strength slash weakness. And this is something that it was just in a coaching session. I was talking to somebody about this. Our greatest strength and our greatest weakness usually are related to the same thing,
Oh, yeah.
and so recognizing that you are a risk averse, if you will, a scaredy cat,
Yeah.
as you like to say, recognizing that's going to make you disproportionately good at something. And at the same time, that strength also needs to be bolstered by the fact that, hey, look, I know that my natural filter tends to be this way. So I got to almost take my own advice with a grain of salt, saying, hey, look, yeah, I know this, but I got to do something. So let me get in, and as that self-awareness is such a thing, that introspection, that
Yes.
is such a huge tool for us as the CEO, as the manager of our own life, to really have this moment with ourselves. I like to say it's like pop myself out of myself, look down at myself and say, okay, what the hell am I working with here? What have I got to work with? Come on. What
Exactly.
kind of a guy is this guy here? You know?
Yes.
And so doing that enables you to take and figure out what kind of equipment you have and how you can best apply yourself, and when you need to train yourself, when you need you need to monitor and adjust yourself, and when you maybe need to bring somebody else in from the outside to sit there and say, hey, take a look at this, because I know I'm not the best. I know how I'm going to answer this, and I don't want to hear my opinion on this.
Exactly. Yeah. And it helps in partnerships too. It's like when you partner up with businesses, it's like, all right, do they have any qualities that, are contradictory to mine? Where are their strengths, my weaknesses, and vice versa? Because that helps a lot and you balance each other out. And it just helps you grow that much more.
And so maybe let's jump in the way back. We were just in the way back machine. So let's go to the way back machine.
Okay.
What got you into investing? What got you there? What made you think this is the direction I wanted to go?
Honestly, I don't know how. So I know how it happened. I'm not really sure why, because um, I was looking to go to college for like a history degree and become maybe a teacher. And what happened was I was working at this patio furniture warehouse in the summer, when I was like 19 years old, I think. And this guy that was my supervisor, he gave me a book called Rolling Stocks, and I read it. And I mean, then it seemed like a great thing, but now it's like just so like basic to me. All it was a book about finding stocks that were basically stuck in a sideways trend and just trading it back and forth, when it got to resistance, sell, when it gets back down to support, buy. So it just seems so simple to me. And it seemed like a active way to create income that, wasn't tied to a job or working for somebody else. And I was like, oh my God, freedom. Like I found it. So that's what initially got me into the stock market. Plus, honestly, I probably, even though I'm risk averse, I still do like to gamble. I mean, I have a risk averse style, I guess, when I gamble, but I like to gamble. I play, I still play poker to these days. So I think the stock market, grabbed me for a couple ways like that. And that's how really it all got started. I started messing with the stock market, and that happened to be right at the tail end of the internet bubble. So I jumped into stocks in 99, 2000. And that first year I looked like a genius. I
Yeah.
was like, I doubled my money in less than a year. And then sure enough, a year later, it was like worth less than half of what I initially put in. I was like, oh, I guess I gotta get a real job. And I
Yeah.
graduated college and ended up, like I said, going into the financial sector anyway. So that's I kind of fell down that rabbit hole. But yeah, once I got kind of like that taste, I was hooked. And it was all about stocks for me, pretty much all my 20s. And I learned a lot. Like I said, paid those market tuitions, learned those lessons. But honestly, that experience, that information has been so useful for me over the last 10, 15 years.
It's interesting. I say this to people all the time. We don't grow and get better from the good times. Sadly, I wish we did. Like
Yeah, but we don't.
yeah, hey, look, I made $1 million and I'm so much wiser for having, hit it big on that one stock that I picked. No, it's the 10 that you lose on that actually teach you the lessons. It's the pain and suffering. I wish we could bottle it where you grew from the
Right?
good times. We'd be billionaires because that would be the greatest.
Yeah.
But
You're
it's
so right, though. You're so right.
it is the suffering sort of that gets us there. So you talk about it being emotional warfare to take and trade. The day trading is emotional warfare, and trading in general tends to have that, that fighting with your own emotions. Like we want to, it went red, I need to sell. It's green, let's buy. Like I know even how I feel about crypto changes based upon how my portfolio is going. Like, do I really want to do this crypto conference right now? I'm not feeling so good about crypto. And so it's a thing. But so let me ask you a question. What makes you good at that warfare, that emotional warfare? What do you think gives you that edge when it comes to dealing with that?
Well, so what's funny is that I've actually learned to I guess more so pick my spots, and also like playing the games I can win, because like I don't day trade much at all anymore. Maybe on occasion, if like there's some real good activity, volatility in like the crypto market, I might do it. But like at this point in my life, I have no desire to sit in front of a screen hours on end watching charts, right? Like that does not seem enjoyable to me. But what I can say is when I do sit down and do that on the rare occasion now, I try and stay cognizant of everything that's going on in terms of, all right, I know that, A, B, C are likely going to happen. And when they do, I basically just need to go to what I want to call it, like just the pre-written operating manual, right? It's not, I think about it. It's not, I make a decision on the fly. It's this, if A happens, I do B, if C happens, I do D, and so on and so forth. Because by doing that, you're just removing the emotion out of it. But I don't like it, I'm making it sound simple. This is like years and years and years and years and years and years of me suffering before I get to that point where it's just like, and I'm not gonna lie, it could still creep in. You know what I mean? Like it's I wish I could think of a better example, but it's the only thing I can think of right now. Like someone that was an alcoholic isn't not an alcoholic because they've been sober for 10 years. They're still an alcoholic, right? It's kind of the same thing with like day trading. It's just like if you had all these, emotional triggers, psychological triggers, and did these dumb things based on certain stuff happening, like that's not magically completely fixed. Like you have to stick with the program.
Yep.
You can't just like start like, gunslinging, free willing it and feeling like you're going to be good to go. Like, no, you're going to fall back into those old patterns, those old habits. So I think it's more so, I don't want to say systematizing, but it's more so just knowing like, all right, I've seen this before. I know that I'm supposed to do this, whether it feels like the right move or the wrong move. I know this is what I'm supposed to do. Just do the damn thing.
So it's kind of the flashback of, hi, my name is Mitch and I'm a day trader kind of thing.
Exactly.
Sticking with the program.
100%. So, but what I've learned is like, what? I want to enjoy life. I want to win the game. And I use this for crypto, especially now. Like with crypto, I call it active investing. So what I do is I have an overall crypto portfolio that I'm holding pretty much all of for the long term, but I'll trade around it, more so swing trades or even, less frequent than that, based on when the market gives me what I call those kind of layup moments, or those like just Captain Obvious moments, because they happen. They even happen in stocks. The problem is the Captain Obvious moments in markets, especially like, well, with stocks and crypto, you get them maybe like 1, 2, 3 times a year. Real estate, you might get it only once every decade, right?
Yeah.
You get these Captain Obvious moments, right? So I've learned to, I'm just like, I'd rather just have a really good hit rate and wait for Captain Obvious moments. So I have my overall portfolio. I'll make trades, I'll trim, as things swing up and down. And then when I see Captain Obvious moments, that's when I'll put my foot down on the pedal. And that for me is the thing I have to really force and drive myself on, because again, it goes back to I'm risk adverse. So even though I know it's the captain obvious, I'm still like, but I don't want to over leverage or I don't want to overexpose. But when you have the good setups, that's when you're supposed to go after it. You know what I mean? Just like with real estate, like right now, 10 years ago was the time to be aggressive, use leverage, lever up. Right now, it's probably not the time to be levering up.
I don't know. I feel like, in the room full of midgets, real estate is still the tallest midget in the room, hands down.
100% agree with you. Like, and it's funny because most people look at me for like that kind of call on the top, blah, 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 because I'm conservative. And I found in all the conversations I've had recently with other real estate investors and, and people in the investment communities I'm part of, I'm actually surprisingly more bullish about real estate over the next 2 years than they are. And I was like, guys, I'm like, real estate is a big, slow moving ship. I was like, all this stuff you're talking about, I agree with you. The problem is it's not probably going to impact us until 2024, 2025.
And you know what? Look, if there's a recession, I'm not really worried about it for real estate either, because there's been plenty of recessions where real estate is the only, the flight to quality actually winds up being real estate. Because here's the crazy thing. When there's inflation, the rents go up. The rents go up with inflation.
Yes.
If you have income property, and guess what? The property tends to appreciate with inflation as well. You're double dipping. And if you borrowed money to buy it, guess what? That money you're paying the bank back is less and less valuable money. It's a win-win-win. And so, no, I think that people have flat out missed the boat. I'm still going long in real estate. I mean, if it's cash or real estate,
I'm closing a deal. I'm closing another deal next week. I just refinanced the deal. I'm closing another deal. I got a fix and flip we're finishing up that we're going to actually refi and hold. So I'm with you. I guess, with that is, I also know though, like I'm not going to be uber aggressive right now, but I'm still buying real estate.
Yeah, no, I get it.
If it cash flows, I'm buying it.
Yeah, no, that's it. I mean, if it's got positive cash flow right now, we helped a lady into one about 9 months ago now.
Okay.
Her average rent was a triplex, 321s, had all kinds of problems with the appraisal. Now the property, I was the one that valued the property on the buy side. So I did the numbers. It's performing at 6.5% rate of return. I'm like, in today's market, that's great. You get better than 5.5. You're killing it. 6.5. We should have no problem with them appraising. They appraised the property, but they appraised it against a 3-bedroom, 2-bath, single family home because the square footage was the same. They had 3-bedroom, 2-bath. Now I have a 6-bedroom, 3-bath duplex that they comped against 3 2s. And they said they brought the appraisal in like 60,000 less. Anyway, I sent the letter to the bank and, contested the appraisal, whatever. Even the bankers came back and they agreed with me. They're like, you're absolutely right. This is ridiculous. Yeah. They sent me another appraisal that was whatever. So the case I made was so good. My buyer said, you know what, forget it. I'm just going to put the extra 60,000 or whatever it is up and buy the property. Those rents were $1,222. We just put it on the market for $1,700. One of the units went vacant. 45 offers in 48 hours.
Right? It's crazy. I like when one of my tenants tell me they're moving, I'm like happy dance. I was like, I wish you the best, because I know like I'm going to be able to get a huge jump in rent. And, I try and some people are a little more aggressive. Like, I don't try and, hit my tenants over the head with a hammer when it comes to rent increases. At the same time, I mean, I'm not running a charity, but, anyone that's been there for a while, like, either they're under market or if I inherited a tenant, whatever it is. So like, it's so much easier when someone moves out to get to market, because it's like, you refresh it, you list it. And like you said, it is a fee. Like all we do now is we do one open house where I have my partner go there and that's it. One day, ton of people show up. Everyone fills out the application online. It's a feeding frenzy.
Yep.
We go through the apps, we find the qualified candidates and then we narrow it down. And
well, one of the things that I think is super interesting for this market is the migratory factor of this market, which is we've had a lot of migration into Florida. Right. Yes. And so, I mean, if you look at even how Manhattan got to be the way that Manhattan is, what happened was that wealth increased in the area, which forced folks that were living in an area they could no longer afford that area. So they moved to outlying areas. Yep. And eventually that happened so much that even Long Island is, you can go an hour outside of New York City and there's people that have all been forced further and further out. And then some people have a bunch of money and then they choose to go further out. But even so, and so you're seeing these migratory patterns, which is crazy because when you think about it, I own a lot of C quality property, right? It's kind of like in an neighborhood. But the thing is, I'm getting B plus tenants now because my A plus tenants, the A plus tenants that were in the high end stuff, they can't afford the high end stuff. So now they're going into B plus buildings to try to find spaces. So they're willing to pay A plus prices because that's what they were paying, but they're paying, or the old A plus prices, but they'll play in the B plus building because they want at least the nicest place they can get. They're used to living someplace nice and they've had to move down the peg. Well, this person that was used to living in a B plus building, he can't afford to be in a B plus building anymore. So he's now in my property. If I make my property nice, I'm getting a better quality of tenant than I'm used to having. This is a very, very good thing for me. What now? You may ask, what happens to the DF tenants? They're moving. They're migrating. They're going to places like Jupiter and Homestead and other countries further and further out, other cities, right? Way out there.
And you see this everywhere. So like, since 2019, I've been investing up north in Massachusetts, right? And it's the same thing. Like, and I grew up on Long Island. So that what you described, like I saw that even growing up. And I remember like when people were buying houses that I thought were like way out east. And now that's not even considered far, out far east. And I saw the same thing happen with Massachusetts where it like you got Boston and everything just pushing west, right? Yep. And I'm in a C class area. And over the last 3 or 4 years, all of the B tenants in like the next like mid-major city have gotten pushed out from essentially the Boston money pushing further out. And now they're out my way. And now I'm getting B plus tenants in my C, but same thing. We rent them. They look money, like, look like they, HGTV status. And it's just like, boom, we're getting B plus tenants. And like, when we first started investing there, my biggest concern was actually the quality of tenant we were going to get. And we we're going to have to deal with a bunch of drama. And so far, honestly, every tenant we've put in has been awesome. The only problems we actually had is tenants that we inherited, which were long time, like holdovers that have been in that town 10, 20 years, and obviously we're that old guard. But yeah, they're all getting pushed even further west now. Yep. Because of the affordability. And it's wild. And it's just like, it's been great, obviously, for us because we've been able to get a better rent, better quality tenant. But at the same time, it's just like, I wonder, it's like something's got to give at some point. At some point, like that affordability, yeah, you know what I mean?
You would figure, but then again, you look at places like New York, you look at places like San Francisco, Chicago, and the price per square foot is significantly higher. So there's the possibility of that affordability. I mean, this is the thing, and this is always the thing that I kind of go back to because I have people that start talking about ideas that sort of start to sound like rent control, which we know has failed everywhere that it's ever went. Yeah. And so I sit there and say, okay, so how did the prices go up? Did somebody put a gun to the tenant's head and say, no, you're going to have to pay this? No, the landlord said, hey, look, if you pay me $3,000 a month, I'll let you have the space. And some tenant somewhere said, you know what, I'll give you $3,000.
Yeah.
I mean, it's a free exchange between two people. What's happened is the people are willing to exchange more money for the exact same place.
Yeah.
So if that's the case, who are you going to bring in to sit there and say, no, you guys, I know it's your money and I know it's your place. You guys can't make the decision. Me as a third party, I'm going to take and tell you how much it's got to be. And I mean, luckily they were making a whole bunch of noise about this in Miami-Dade and Broward County. And all they did was they passed the rule that if you're going to take the tenant's rent up more than a certain amount, you got to give them 60 days notice now. Which
I did see that. Yeah.
Okay. That's, you know what? That's a reasonable solution, given up time. I get that.
Yes.
That's fair. Right. It doesn't really make you a market maker at that point. You're just taking and making some rules that are going to make the market maybe give people a little bit more room for the actual human experience of having to move. Cool. Yes. But, as far as actually taking and dictating how a market works every time, I mean, my God, they were talking the other day. I don't know if you saw it on the news about fixing fuel prices. I was like, what? I mean, the 1970s literally happened. We had inflation, then they tried to fix fuel prices. Then we had a fuel crisis and it made the inflation worse. What do you not understand? I understand you read all the important stuff in school. I'm not even going to say what that is to not get myself, banned here. Right. But I mean, like, how about having read a history book that actually talks about the history of what economically happened when these bad ideas were put in place for a second, please?
Well, and that's what baffles me too, because, like you pretty much alluded to, like price controls have been a failed experiment in every country, pretty much in every way, shape and form. And the irony is you see stuff happen in prior, even US history, and then they talk about doing the same thing again. It's just like, am I missing something? Like, did you forget your history? Like, So
did you take a history class? I mean, were you awake when they were giving the history class? I mean, were hallucinogens involved? What did you?
Well, my favorite is, and we've heard this, and obviously when it comes to the stock market so many times, is when people like to say it's different this time.
Oh my God.
No, it's not. And it's like, all right, you know what? I'll agree with you in terms of, there's going to be some subtleties of difference. That's why I'll say, like, history doesn't repeat, but it rhymes pretty damn well.
Yeah. Oh my gosh. I was teaching a class just yesterday, and I had somebody, I was talking about inflation. They're like, you mean the corporate greed and companies?
Oh God.
I'm like, this class is on crypto. I can't fix ignorant.
I can't engage about your quote unquote corporate greed. Now,
I know, like the tilt light came on. I didn't even know where to go with that, because it's like, you do understand that the market is made up of people that are willingly choosing to pay the price, and sellers are selling at whatever price that the buyers will pay. The only reason why prices are going up is because they don't have a choice. The cost to make the thing is becoming more.
Well, and that goes back to, talk about the ultimate backfire. There was all this fight about, raising minimum wage and the minimum wage increases, and these minimum wage increases happened, and now inflation has not only wiped out that increase, they're actually making less money on an inflation-based basis now than 2 years ago. So talk about your all-time backfires.
And it always happens. There's an economist that I really enjoy named Thomas Sowell, and his line, and I love this line, is the real minimum wage is always the same thing, 0, which means if they can't afford the labor anymore, that job will cease to exist.
Yes.
And so you go to Europe and there's no people to bag groceries. Why? Because the minimum they can pay somebody is so much. And you know what? The stores have determined that the customers aren't willing to pay extra to have that service there. So they just eliminated that position. Just gone. Yeah. And so the real minimum wage, and you saw this, right? In McDonald's, they started talking about taking the minimum wage up. What they put those little kiosks in so you could order and didn't need a cashier anymore.
Yeah.
There used to be 3 cashiers in every McDonald's. Now I go, there's only ever 1.
Yeah.
What am I doing in McDonald's? Getting fatter. That's what I'm doing in McDonald's.
Occasionally we'll have our weaknesses.
You know what? One of those little apple pies every once in a while. The problem is just one of those apple pies is my issue. So they're 2 for how much? Give me 4 of them, just sit
those
there.
Apple pies are tasty. I'm not going to lie. I was hooked on them for a while.
Yeah, I know, it's a thing.
Well, all right. You know what's crazy about all this, though, is that something I always tell myself and I remind myself is that there's pros and cons to everything, right? So even though I believe in capitalism and I believe in free markets, I know that there's also negatives with that. You want to know why? Sure. Because there's just to use an example, there's bad operators. Unfortunately, there's going to be bad operators. There's going to be people that take advantage. But here's the thing too. There's going to be bad operators on the opposite side when you talk about socialism and complete control and price controls, right? Those powers that be, that, not all of them are, good operators. There's going to be bad operators.
Of course.
Bad operators,
and that's the issue. Who are you going to empower? How empowered do you want to make? What's crazy is, right, you think about how everybody, it's basically Yankees and Red Sox almost with political parties, right? Like no one has any tolerance for anybody. I'm okay if let's talk about it. That's fine, right? But nobody wants to have the conversation anymore. Well, here's the crazy thing. You don't trust government when the folks you don't like are in power, right? Yet you want to empower them. You do realize the other folks are going to get in power at some point, and they're going to now have all this extra power that you just gave them that they could potentially use against. Is that really what you want? It seems to me very foolhardy when people have such contempt for certain parts of government, and at the same time, they want to take and re-empower them. It is what it is. But again, when we start talking about what makes a market in a free market is willing buyers and sellers willing to part with goods at a certain price.
Supply and demand.
It is just a simple thing. And so, if there's a shortage in Nebraska on corn, the price of ice cream in the store is going to go up because guess what? High fructose corn syrup they used to sweeten that sucker, that just got more expensive. So they have to raise the price of ice cream. And now other people that were using corn for things, they start looking at other products they can use instead of corn because now maybe those products become economically feasible. And now the price of sugar goes up or whatever. And so all of this stuff, it's a beautiful symphony. That's one of the things that I never really appreciated until I started paying attention to economics is the power of a price, of all the things that are actually all the things that are represented in just a simple price, all the shortage that occurred over here and the surplus over here, and how it all balances out in one single number that represents what everybody along that supply chain needs to make in order to bring that product to market. It's really quite a beautiful symphony that an economy can be.
It absolutely is. And you know what's crazy is that, it's not flatlined. You know what I mean? Like that number that you speak of, like, yeah, that's the number we want to be at, but that's not the number where we are. Often it's like you have the number and then you have up, down, up, down, up, down, up, down.
Sure.
Again, it's the ebbs and flows in the market. And that's the problem, is that people want this perfect 100%, 360, 365, 24/7 efficiency. And it's like, no, that is not going to happen.
No.
And when things get out of whack, upside, downside, that's when all the freaking hoopla and complaints and all that stuff. And it's just like, no, the system's not broken. You just have to understand there's going to be ebbs and flows. That's just a product of a market,
Sure.
whether it's controlled or not even.
And human nature. The fact of the matter is, it's human beings that are interacting. Emotional creatures are interacting with the market,
Yes.
and their emotional reaction to the market. I mean, was there ever really a toilet paper shortage? No, it was that people emotionally reacted to the fact that they were worried about not getting toilet paper. They overconsumed toilet paper, or they over collected toilet paper, and that is what went into the shortage.
Yeah.
And so it wasn't actually a market thing. It was actually an emotional thing, and it was a market reaction to an emotional response. It's kind of cool how that happens, isn't it?
Yeah, it's honestly, and the more I've learned about markets and economics over the years, the more I realize that, emotion and psychology is, I don't want to say the biggest problem, but in terms of, efficient markets, but also the biggest drivers. I mean,
Sure.
If someone wants to be a good investor, you're almost better off studying, social and emotional trends and reactions than you are like, technicals. But I just, I think, we're kind of similar in terms of we agree with kind of less government, more free market. And, that's one of the big reasons that, crypto was like the siren song for me, because that's like the poster child for crypto is freedom and control. And, Bitcoin is designed for that reason.
That is exactly actually was going to lead me into my next question, which is what makes you passionate about what you do? And I think we're actually sniffing at the heels of what got you into crypto, maybe.
Yeah. So obviously that resonated with me in terms of that control. Like, since I'm passionate about finances, I'm passionate about investing, I'm very hands-on with my money. Someone else that might be like, someone that owns like an auto shop or something, like they don't have time to be doing all that. Like they hire someone to do that. They run their auto shop. That's how they make their money. And they just want to make sure they have, a nest egg being built up. Right. So they're fine being on centralized exchanges and having a financial advisor, tell them where their money should be, all that stuff. That's great. Me, I'm very hands-on. I want control of my money. The more control of my money I have, the happier I am, because I feel like I can do a better job with my money than letting the powers that be handle it. So, when crypto comes along, I was just like, wow, this is legit, like complete freedom with my money, but also complete responsibility. Like if I make a mistake, that money's gone and that's on me. There's no FDIC insured. There's no calling customer support.
There's no customer support. Yeah,
exactly. And that petrifies most people. That excited me. I was like, yes, like I have full control. No one can tell me what to do with my money, how to do anything with it. Right. And if I'm going to make a mistake, that's the price I got to pay though. Like you want ultimate freedom, then you have ultimate responsibility. It's kind of like, it's like the Spider-Man quote, right? With great power comes great responsibility.
Great responsibility. Absolutely.
So, that was one of the things that really drew me to crypto, but also, from the investment aspect of it, I did look at it as a potential, alpha for me, because I'm looking at the crypto market, so I got into crypto. I started looking at it in like 2014, 2015, didn't do anything. And then in 2016, I finally jumped in. And I'm looking at it in 2016 and especially 2017 when we had that, the last big bull run. And I'm looking at the charts and I'm looking at the way the prices behave. And I'm like, this is literally internet stocks in the late 90s. I'm like, I've seen this show before, but now I know what it looks like. I've seen this movie. Yeah. The first time I watched it, I didn't know it was coming. This time I know it's going to happen. So I got so excited. And obviously, I used that to my advantage. Like I couldn't believe how much like the technical analysis on charting was working out. Like it was almost comical where like, I almost started second guessing myself where I'm like, this can't work again. Like this can't work again. Like this.
No way.
Right. It's just no. but it did. And, and I knew that window was only going to last for so long.
Yeah.
So, and I wouldn't say it's completely gone, but now you're seeing a lot more like with the stock market where you kind of get like, these fake outs and all this different stuff. Cause now there's a lot of bot trading. There's a lot of algos that really didn't exist in 2016. Like there just wasn't, just from not only lack of tech that was in the space, but just lack of places to do it. You had limited places you could trade, whether it was decentralized or centralized exchanges. Now there's plenty of those outlets, so you can basically have trading bots and all that good stuff. And also, there's no real institutional money back then, right?
Yeah.
Now you have institutional money on top of that. So all those factors that influence, moves weren't really there. So that excited me, and obviously I got hooked. And I just started building the crypto portfolio from there, and it started becoming less and less stocks for me and more crypto. And I'm at the point where I barely pay attention to the stock market anymore. I also believe in crypto in the long term, in that crypto is not going anywhere. Bitcoin's obviously not going to go anywhere because it's kind of like the name brand of crypto. But I do know that probably 90% of the altcoins that are out there are probably going to be worth pennies at some point, just like in the .com bubble. It's like for every one Amazon, there was 10 globe.coms, you know what I mean?
Yeah.
And I'm fine with that. It's like, I have my portfolio. I know that a good chunk of them are going to probably be losers, and it doesn't matter, because as long as a handful of them have become like the Amazon, types. So I just felt like it was a great opportunity where I didn't, internet bubble, and internet, like I was late teens, about to turn 20, 21 years old for that. I was just young. I didn't have money.
Yeah. Well, thank God you wouldn't have had money when you were done either.
Well, exactly. Well, yeah. So I lost money then, but at least it wasn't, crippling. Was
a big money. It was.
Although I don't know if we have time for that. I have a story about my first time I technically blew up straight out of college with stocks, and how I actually probably was very more aggressive and got blown up so early that I think maybe that's what created the risk adverse.
So we've come to the root of the drama.
Oh my God. That's what I'm going to tell this. I'm going to try and tell this story as short as possible so we can kind of get back to crypto. So when I graduated college, like I said, I was already messing with stocks, and I went, I did have the .com bubble experience. I did lose money, but it didn't shy me away, because then I learned more about trading. I learned about options, right? And I was like, oh man, options, and I learned about covered calls, right? And you could basically create a passive income strategy with covered calls. So I was like, oh, this is hitting on all cylinders, stocks, passive income. So I graduate college. I get a job, Morgan Stanley, my first job out of college. I'm working for Morgan Stanley. This is in 2001. I buy, remember Cisco Systems? That was the hot tech stock back then.
Mm-hmm.
I load up on Cisco on margin, but not full to the tilt, because I'm like, all right, Cisco could drop. Like I gave myself a huge spread. Like I'm like, Cisco can literally like drop by like 60%. And I'm like, until I get a margin call, right? So, and hold on, here's the real fun part. The 10 grand I put into Cisco Systems stock, cash advance on a credit card.
Oh my God.
So technically, I guess I was aggressive at 21 years.
That would be pretty aggressive.
So I buy Cisco Systems with the 10 grand that I borrow, and then I go on margin with that 10 grand, right? This is June of 2001. Buy the stock, do a covered call for that month, expires worthless. I keep that premium. Awesome. Next month, do it again. Keep the premium. Next month, do it again. Keep the premium. It's 3 months. I'm good. I do it for September. Sell my options. Good to go. And then a little thing called 9/11 happens.
Yep.
So, unfortunately, on that day, 2 very bad things happened. One, I was in Tower 2, so I had to go running for my life from a plane.
Oh, wow.
Yeah. So that was the sad. What's really sad is that part is not actually the worst part. It's the getting wrecked in Cisco. So obviously I was in a bit of shock, obviously, from being in Tower 2.
Yeah, I would imagine so.
Yeah. So, get through all that, get back to the office. Obviously, the market opens, whatever it was the next week. And we open at these crazy lows. And I'm literally like right at the price that I'm gonna get a margin call. But again, I'm young. I've never had a margin call before. I don't know how it works. I don't know how much time they give you. Instead, I just freak out. I'm like, oh my God, like blah, blah, blah. So I just sell.
Oh,
I sell it all. I take the L. I pretty much lose like the full 10 grand. Here's the real kicker. The price of Cisco bottomed out 20 cents above where my margin call would have got triggered. And then we know what happened. We basically did a V bottom in the stock market. So all I had to do is do nothing and sit there and hold, and I would have been good to go like 6 months later. Instead, here I am, like 22 years old with 10 grand in credit card debt now, just started a real job. And I spent the next year hell bent on paying that 10 grand off as fast as possible. So now while the market's going straight up, what am I doing? I'm not investing. I'm paying off 10 grand of debt. So that, I think, was me getting burned and like saying, I'm never going to put myself in that position again where I'm jammed up and I can't invest. And, and also, I looked at debt different then. Like now I might do it differently because I had more of a Dave Ramsey attitude back then, which is comical because I look at like Dave Ramsey now and I'm like, this, what is this guy talking about? Like, no, this is terrible advice.
I think I figured him out. I think I figured it out.
I did too. Hold on. Can I beat you to it?
Good. Give it a shot.
My theory at him is he absolutely is useful and he should be listened to for anyone that is trying to get to zero. Someone that's broke and or in debt. But once you get to zero and now your net worth is flat, forget about Dave Ramsey and go see Rich Dad Poor Dad.
Yeah. No, I mean, I think his position is kind of like, look, debt is kind of like a nail gun. And the people that I talk to are like 3-year-olds. You would never give a nail gun to a 3-year-old, right? But I have worked with a hammer and nail, and I've worked with a nail gun. And I've got to say, hands down, nail gun, the way to go, right?
Yeah.
All day, every day. So here's the thing. My position when I train people to invest is, look, guys, you're right. The nail gun debt is dangerous. But guess what? People use the nail gun every single day, and they get a whole hell of a lot more done than the folks that are sitting there doing it in cash, hammer and nail style.
Oh, yeah.
So why don't we take and learn to respect and use the nail gun properly rather than just, oh my God, nail guns are dangerous. Never touch a nail gun.
100%.
And so I think that's the different approach that I try to take with my investor customers that I try to train is, look, guys, I know you've been told debt is a burden. And you know what? That's because a lot of the debt that we have in America is consumer debt. It is not the good kind of debt to have. But you know what? When Dave says debt is dumb, I want to ask him, Dave, just show me one billionaire in this country that has no debt, and I'll agree with you. But
Absolutely.
I can't think of one.
No,
so,
there isn't. Yeah.
There isn't.
And like you said, it's just about being responsible.
That's
being
it.
responsible with debt, like good debt, bad debt. And you can leverage debt and still be conservative. You know what I mean? Like I'm very conservative compared to most real estate investors with the way I leverage debt. You know what I mean?
Yeah.
Like I like to have a chunk of equity where I'm like, all right, if we have a downturn in the market and, for some reason I have a life event and I need to sell stuff, I want to know that I can sell without having to come out of pocket.
Absolutely. No, I want to be 60. I don't want to be more than 65% LTV. That's my comfort level.
Yeah. And to me, that I think that's conservative. You got people, and we've seen it, in other markets and obviously in bubbles, people 90%, 90, like any dollar they can borrow. And it's like, all it takes is one bad moment, one bad break, one bad deal. And now you're jammed up.
Absolutely. No, I mean, and especially in real estate where liquidity is such an issue, it is a thing. Preserve one of the key things my position always when I get an investor customer is I say, all right, this is how much we got to work with. This is how far we can go. This is the ultimate in aggressiveness here. So let's now talk about risk. Let's talk about your risk pro. Let's talk about what you're comfortable with and figure out how far along this continuum we want to go. Me personally, my position isn't here. I'm more here. All right. Yep. I'm going to take on some of the certain risk, the risk that the real estate market goes to zero. Does it exist? I suppose, the earth could become irradiated by nuclear fallout. And then yes, Florida real estate under the sun where the Sunshine State may become obsolete. It could happen. I'm not going to bank on it. I don't bank on the black swan event because you're never going to know. It's going to get you, even if you think you're preparing for it, because it's a black swan. Nobody ever 100%. Thought of it before. And so, figuring out where that comfort level is, that's where it's at. And I always tell folks, and I think you'd probably agree with this. For me, when I work with a customer, I always try to focus on the risks. I want them to understand that I understand what the risks are, and
Yeah.
these are what the risks are, and this is how you mitigate those risks.
Yeah.
You want to invest in real estate. Okay, well, here's the things you got to worry about. Can you find a tenant? Will you be able to sell if you need to? What happens if there's a downturn in rents? What happens if vacancy? What are all the things? And what are the metrics? What are the indicators we have to indicate how likely any of these things are to happen? Once we understand that, now we have our head wrapped around what it is we're actually looking to do. Is this or is this not a risky thing? And am I comfortable with the level of risk that I'm exposing myself to? If not, do I get insurance? Is there a way to mitigate that some other way? What are the tools that exist? Because we're not reinventing the wheel. We're not doing anything that 100 million people haven't done before.
Exactly.
People have been figuring out how to fix these problems for a long time. Let's not be pioneers. Let's figure out what they did and do that.
Yeah.
And so that's, it seems so simple, but once again, it's that idea of learn the proper way to handle the nail gun, and life gets to be a lot easier. If you don't do that, though, if you don't do that due diligence, that risk management due diligence, then don't be surprised when you get a nail someplace you really don't want one.
Yeah, exactly. I mean, honestly, I love that analogy. I might actually have to use that going forward. It's very simple,
interchange it,
and everyone gets it.
I interchange it with chainsaw, actually. I like chainsaw a lot because like 2/3 of the length of it can maim you. Even the third that's supposed to be safe where you pull a chain, you could throw something out and pulling that chain. The exhaust is over there, it can burn you. I mean, all kinds of bad stuff can happen. Yet lumberjacks cut down trees with those things all day, every day, and don't get hurt. But they know how to use it. And so, so by all means, of course, Mitch, any analogy of mine is yours, buddy.
I appreciate it.
That's how we work.
You know what's beautiful too about that? It's like, you're talking about real estate, and like, that's what's great about real estate. You don't have to reinvent the wheel. Like, it's been around forever. Like, that's one of the reasons I got into real estate, because I'm like, you know what? This is an industry, and it might sound bad, but I'm definitely not trying to downplay it. But like, real estate investing, you don't have to be like an intellectual person. Like, you don't have to be like, it's an industry that you can have a lot of success in without being like super smart. Like this, I've met guys that even said to me, they're like, I'm an idiot. Look at me. I'm crushing it. Like, it's not like real estate is not that complicated. Like, I literally had that. Like, it was this old school Italian guy up in New York. And he's just like, look at me. He's like, I'm an idiot. He's like, and he like owned like some he was worth like 10 million. And it was just, I'm like, and I forget how much real estate he had. And he's like, don't make it. He's like, don't make it harder than it needs. And that's what I love about real estate is like, once you learn those basic fundamentals, like you pretty much have the blueprint. When you start getting involved in, stocks and cryptos and stuff, like, you have, all right, here's your basics, but then there's so many levels up you can go.
Oh my God. Yeah.
And I feel like when I'm in the communities with my crypto nerds, like, I feel dumb.
Yeah. Oh, absolutely.
But then when I'm talking to like just regular everyday folk about crypto, they think I'm a genius. And I was like,
absolutely. It happens all the time.
Yeah.
I have one of the questions I ask when I teach classes. I'm like, on a scale of 1 to 10, where do you place your crypto knowledge? I like to do that early on. So because I'm teaching to real estate agents. So every class is like 80-90% of the class is 0 to 3. Yeah. So they have no clue what's going on. And then I have a few 8, 9s, and 10s that think they're 8, 9s, and 10s. So then when I put my slide says, I think I'm a solid 5. Why? Nice. Because I got a handful of crypto nerds that I go to, and I start talking to them, and I'm like, okay, are they even speaking English at this point?
Right.
Because, but the people in the class that I teach, they all think I am this, and I mean, to some extent, I've really educated myself on it, but, when you get to the people that are actually understand the underlying, the ones and zeros that go into creating this stuff, there is a whole different level of knowledge to go to. But you know what? Let's kind of circle back to something that's quite topical. Ethereum is kind of making a big switch coming up here, right? Kind of a big deal. What do you think? Mitch, what are your thoughts on Ethereum switching to proof of stake?
I'm going to say switching to proof of stake was a necessity. The running joke in one of the crypto communities I'm in is basically that I'm like the biggest Ethereum hater, just because I despise doing any transaction on their blockchain in the current state as a proof of work blockchain. Because
of the gas fees.
Yeah, the gas fees, dumb expensive. It's slow. It's just I won't even do transactions on it. I think I've done one transaction on the Ethereum blockchain in the last year and a half. Like, I just refuse. Now, do I still hold some Ethereum? Yes, of course. I'm not an idiot. It's the number 2 crypto by market cap. Should I have more Ethereum? Oh, I should have way more Ethereum than I have. But unfortunately, I did let my emotions come in, and I'm like, I loathe that freaking blockchain. Like, I will not. So I have some, don't get me wrong, and then obviously, I own some NFTs that, kind of Ethereum based. So that helps me, like, I guess, hold some Ethereum as well. But if Ethereum's going to scale and be like the place for, all things smart contracts and platforms and projects, and Web3, and yes, proof of stake needed to happen, because you can't have those gas fees, and that it's just not feasible. At some point, your first mover advantage is not going to be good enough anymore, and people are going to go elsewhere. It doesn't matter if you have the 10x as many projects and platforms built on your blockchain. At some point, that tide is going to turn. So I don't think they had a choice. So I'm looking forward to it. I've been making fun of it because the running joke always is like, oh, Ethereum 2.0 in 2 years, and then 2 years later, oh, Ethereum 2.0 in 2 years. So it looks like it's finally going to happen this year. I'm excited. I'm not going to lie. I might even start buying up a little Ethereum as it gets closer, kind of buy that run up into it's almost like a stock split. You know what I mean? You buy the stock up into the split, and then you sell it right before the split, and then you buy the post split dip. I did that with Tesla when Tesla split. So I might actually, actively invest. I'm not even going to call it trade. I might actively invest Ethereum in the run up to the actual, crossover, but I'm very excited. I think it's going to be very important for the crypto industry, and well needed, because it's easier for a recognized brand to just make the change that's needed, as opposed to getting everyone to migrate to another chain that's already doing what Ethereum should be doing. You know what I mean? Like getting everyone to move to a Binance Smart Chain or a Polygon, or or even Solana, Avalanche, whatever you want to talk to as competitors. So again, I'm excited, even though I'm currently not an Ethereum fan. Hopefully they'll convert me, and I think it will be good for the crypto industry in a whole, and could potentially be a bullish catalyst for the crypto market in a time that one is obviously well needed, with all types of markets being kind of on the downswing in terms of speculative markets.
Big time. All right, so maybe just quickly toss one out there, maybe that you think is a coin, is something that people should be maybe keeping an eye on, or that one that you're keeping an eye on. Just nothing crazy.
This is the not financial advice segment of the show.
Absolutely not. No, I'm saying to you, Mitch, what's a coin that you like right now for your portfolio?
All right, so I mean, there's a few I would mention, but a lot of them are DeFi related and impossible for regular folk to find. So I'm going to go with one that at least you can find on some centralized exchanges. So I'm a big fan of Thorchain, and their token is called Rune. The ticker is Rune, RUNE. And the reason I love Thorchain is it's solving the interoperability problem, where the most annoying thing about crypto is you have all these different blockchains, and it's like, all right, I need to wrap my Bitcoin onto the Ethereum chain and blah, blah, blah. With Thorchain, you can put native tokens on there. So you can have your native Bitcoin on Thorchain. So if I want to take my Bitcoin, send it to my Thorchain wallet and stake it against some Rune and earn some yield, but still have my actual I can do that. So that's why I'm bullish on that, because it's solving a problem.
I'm a fan.
Yeah. And I think that will at least, and is it a problem that will always exist? Is it a problem that can be solved by other chains? Sure, it can. But they're early to the game, and at least in the crypto community, people are excited about it because they're tired of just having to wrap and jump between chains. And I do it; it's a pain in the butt. It eats up time, it eats gas fees, right? So,
it costs a fortune. I want to make $1,000 trade, and it's like by the time it's done, I got $12.68 of what I wanted.
Right. So that's one that I'm basically just I'm hodling, if you will. I got a bag, and I'm hodling it, and I'm, hoping that coin sees, triple digits at some point. I haven't even looked where it's at right now. It's probably like $4 or $5 after this downturn, but that's just one I'm holding.
Let me translate. Hodling is hold on for dear life for those non-crypto folk out there. And let me ask you this. I know that you do a lot of education in the crypto space and in the trading space and all that. That's kind of what ScaredyCatGuide is all about, right? Yeah. And so that's where you spend your time, a lot of your time right now. Yeah.
I spend a chunk of it there. Yeah. Good chunk of it outside of, doing my own investing. That's where I spend the rest of it. Okay.
And so I know you're a guy that doesn't sit on your laurels. I know that you're a mover and shaker. So what is next? What's the next project on the Mitch
Wow, it's
Uh,
crazy that you actually asked that because something came together this week that I'm not gonna lie, I've been sitting on for 8 months in terms of people asking me to do it and me kind of saying no because I was just like, I don't know if I want to do that because that kind of feels like a full-time job. And I've got myself into a place where like, you know, yeah, I'm busy, but I also have a lot of flexibility and I'm not really responsible to anybody except for myself.
nice.
So that's why I've been hesitant to start this. So I actually talked to a syndication attorney on Wednesday, and the launch of a crypto fund is starting to become more real. And this stemmed actually from real estate investors because I go a lot of meetups in South Florida. Some I host, and some I've just been going to for years and years and years. And real estate investors in the end are investors, so
Hmm.
they're intrigued by crypto,
Yep.
but they're busy with their real estate. They're doing deals. They don't want to spend time, not like forget even learning it. Like they can learn it. Even after I teach some of them, they're still like, that's great. Can you do it for me?
Yeah.
Like they don't want to, like they don't have time. Real estate's their thing. That's what, they got families, they got wives, kids, and they got their real
Yeah.
estate.
No, it's a
So
second job. It's
yeah. So the irony is this crypto fund may be launched and it's literally just going to be a bunch of real estate investors that essentially are, put money into the fund so they kind of exposure to crypto. So
mhm.
that's the next big thing that I've been going back and forth on for a while. And I think I have made the decision to move forward. I think I found a blueprint that I can be happy with where it's not going to take over my life. But
Mhm.
at the same time, I can still be comfortable that I'm, going to do a good job and give it the time it needs because, that's another level. Like,
Oh yeah.
that's up other people's money. You know what I mean? Like I take that really serious, like probably more serious than most people do. So I'm just like, all right, if I'm going to do this. So yeah, that's the next big thing probably.
Beautiful. Beautiful. That's great stuff, man. It's always great to have a project in the works. I mean, we're working on one right now that's going to be an STO
Oh,
um,
nice.
on a multifamily property is what we're working on
Yeah,
this end,
man.
which is I'm kind of
Well, and it's
excited
tough
about.
too, because like you love to teach as well, and I love to teach. And it's just like, I might have to dial back my coaching and teaching a little bit, once this fund goes live, because that's going to be it's going to be the priority.
Of course.
And B, it's still going to be somewhat time consuming. So, but I'll still be doing some teaching. I mean, I don't teach as much as you do. I mean, you're an animal. You're a bull. I mean, you're just banging out classes nonstop. Like me, I do. I'm on a bunch of calls, per every week, but a lot of them are podcasts. A lot of them are more also for my enjoyment. But as far as the teaching, I'm consistent basically one day a week where I'm on, multiple calls and, teaching crypto. And, you know, it's good just to get the word out too, because more people investing in crypto in the end is good for my investments.
It's good for your investments, and realistically, it's good for them because this is an idea whose time has come. I don't think there's any way around that.
Yes.
I mean, you can say, Bitcoin can seem old and crusty. People are, oh, it's seen its day. The reality of it is the thing that it was the proof case that you could take and create digital money and make it valuable, that people would actually, the problems that it solved by doing what it does, the value that's there, enough people have assessed it and said, you know what, this is actually a good thing. Uh,
100%. Yeah, it's not going anywhere. That's why I tell people too, like, obviously we had the whole crash with UST and Luna and that whole debacle. And like people are like, oh, cryptos. I'm like, no, I'm like Bitcoin. But like right now,
Yeah.
I'm buying Bitcoin in the dip. I haven't even bought any alts yet. I've only bought Bitcoin so far because I know Bitcoin's not going anywhere. Like the alts, you never know how they're going to play out. You know, I've been pretty conservative so far buying Bitcoin on this dip, and I haven't gotten to anything else. But you know, that goes back to what I was saying with altcoins. I mean, there's so many altcoins that aren't going to exist or they're going to be worth pennies, and that's fine because the same thing happened with the internet and internet stocks.
Yeah, that's
So many
right.
businesses went out of business. They were the hot thing for a while, and then they went out of business. And the whole UST Luna thing was an experience, and the algorithmic stablecoin was an experiment, and it was like, wow, this might work. And the scary part is if it did work, the US dollar was even in more trouble because now it's like, all right, we figure out a way to basically have stableness in a currency without having to peg it to something, like to peg it to the US dollar, to peg it to anything,
Mm-hmm.
right? Can that work? Maybe. But this got exploited. It was the way it was set up, it was exploitable. There's obviously, rumors that it was a coordinated attack, which honestly, I kind of agree with. And makes sense because it was a serious threat. If that worked out, it was a serious threat to traditional money. It's like, holy shit, we actually found a new answer.
Yeah.
And
Well,
it's never going to be that easy.
I think that realistically, what the climate is more rife now with Americans experiencing for the first time in 30 years real inflation.
Yes.
They're experiencing the real effect of their government manipulating their money,
Yes.
of basically taxing them without any without any fanfare, without any warning, basically creating an atmosphere that devalued the wealth and devalued the work that you put into to build that wealth.
Yeah.
You've taken that money you have is representative of work you did at some point in your life.
Yeah.
And that has now been discounted without any warning to you. And so I think this puts people in a place where they're definitely hungrier for that idea of something that's going to take that power out of the hands of people that, for the most part, tend to screw up pretty much everything they do. I mean, I didn't say that out loud, did I? Yeah, I mean, like I say to people all the time, how was your DMV experience? How was your time when you had to call IRS? How was that? Look, they have no incentive to do it well, other than they just can't do it bad enough that people revolt. But short of that, they can pretty much do whatever the heck they want. They have no competitors. And so, being in this position now where, crypto has put itself as an alternative, because there was no alternative.
No.
I mean, dear God. I mean, when you look at the 1930s to the 70s, it was illegal to own gold because they wanted to give you no choice but to be on their currency, which they artificially pegged. I mean, the nonsense that they pulled there in the 30s, coming off the gold standard, making everybody turn in their gold and then taking and repegging it, so that everybody basically got ripped off.
Yeah. Well, I think about it. Yeah, they ripped people off for 40 years, and then like, oh shit, we don't have nearly enough gold for this paper. And then Nixon's like, gold standard, we're not pegged to that anymore.
And boom, you had the inflation of the 1970s because they rapidly expanded the money supply. What just happened? They rapidly expanded the money supply. How long did it take for that to sort itself out? It was more than 12, like 14 years from like 1984. They really, 82, 83, they got it to start to cool down. But 84, they really got a handle on it. So 14 years of pain and suffering. And I got to tell you what, folks, if you look at the chart of what the inflation did, it wasn't a slow ticking down. It went up, it went down, and it went back up again. And so, folks, we got, to me, we got a few years of this in front of us to take and get a handle on it.
100%.
And so I don't think this year, and maybe I'm wrong, I don't think this year we see 7% inflation. I think that we're much more likely to see 10% inflation by the end of the year.
Oh, but, yeah, you think it's going even higher?
I think honestly, I think that what we did this time was significantly more growth to the actual supply of money. And with interest rates being where they are, I mean, they're not really incentivizing the buying of bonds. They're not really incentivizing people to pull the money out.
Not yet.
I mean, at 1%. I mean, where did Volcker take the interest rates? Volcker's position was back in the 70s, the federal funds rate had to be higher than the rate of inflation. So if the rate of inflation is 8.3, the federal funds rate needs to be 9. The federal funds rate is at 9. The mortgage interest rates are at 12 or 13.
Fed fund rates never going that high because you know what? They don't have the gall to do it.
They don't have the gall. And honestly, they would completely crush the economy.
100%. In fact, I got to be honest with you. My theory is that Fed's going to keep raising. Market's going to be terrible this summer. I'm expecting a bad market. And, I'm sure we'll get some bounces, but I'm expecting a bad market through the summer into the fall. Fed's going to be raising. And then come September, October, it's already going to be ugly enough where they're already starting to backpedal on their words. And which is going to be a mess, though, because inflation, especially with the midterm elections coming up, they're going to be getting pressure from Washington. And I was like, yep. I have zero faith in the Fed anymore at this point.
Oh my God. I mean, had they been wrong about everything they've said, or is it just me? I mean, like transient inflation.
Yeah.
It transiented from bad to worse. If that's what you meant by transient. Yeah. It's moving. It's moving. It's moving from bad to worse. But man, I mean, these are supposed to be the best. Like I said, I'm on video, like in the first part of 2021 talking, I'm saying this is not going anywhere. This is bad and it's going to get worse.
Yep.
I mean, at the beginning of COVID, even right when they started talking about sending out checks. I'm like, hey,
they printed way too much money.
The numbers I've seen is they've increased the money supply 5 times over. We had $4 trillion in 2019. We're at $20 trillion at this point.
Insane.
Look, in stock market, that's a 5-for-1 stock split, right? They just forgot to send me the other 4 shares.
Yeah. Well, and that was the thing too. Like, it was just like stocks, real estate, crypto, everything was just going 45-degree angle nonstop.
Yep.
And I was just like, guys, I'm like, you realize why this is happening, right? Like at some point, the impact of that money, A, is gonna run out, but B, the side effects, the ripple effects from that are also going to come and start rearing their ugly heads. And, no one, listen, when the punch bowl is full and everyone's drunk and having fun, they don't think about what the hangover is going to feel like. And guess what? The high, we're starting to come off that drunk high, and the hangover is about to kick in, and it's going to be one hell of a hangover.
It's going to be one hell of a hangover.
Break out the Advil.
Last question, buddy. If people are like, man, I need to get me some more of that Mitch, where do they go to find, where can they find you? Where's the best place to find you at?
So easiest is to go to the website, ScaredyCatGuide.com. On there, you can find, obviously I got real estate stuff, I got crypto stuff. And also info@ScaredyCatGuide.com. Feel free to email me. I try and get back, if I can. And that's really it. And then same thing, socials, ScaredyCatGuide. I'm pretty much that on all the socials. Also, as far as promoting crypto some more, it's all about Web3. So Web3 is basically social media on blockchains where us, the users and content creators, own our content, and we actually earn from our content instead of Facebook or Twitter making the money. So leofinance.io is a Web3 platform that is specifically focuses on crypto and business and stocks and all that. It's like a seeking alpha on a blockchain. So that's a great place also to find me and find a ton of good crypto content from just people like, me and Josh posting about, what we know about investing. So those are kind of all the places you can find me, and, get some more scaredy cat in your life.
There we go. All right, Mitch, thank you so much for your time. I know we went a little bit long, but I appreciate you giving me the time, bud. It was good talking to you. Good seeing you again.
Yeah, it's always good seeing you, man. And look forward to the next time we get together.
All right, bud. Take care of yourself.
All right, Josh.